Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, May 16th, 5:26 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we are in an uptrend. With the trend gauge in the upper right, we've got the coveted 4 green arrows there. Market leadership acting well and abundant, and all 5 of the major indexes trending above the 3 time frames that we track. That's the short-term 21-day exponential moving average, the medium-term 50-day moving average, and the long-term 200-day moving average. So what happened today after 2 nice days up in the indexes and even more impressively by leaders? A normal pullback in the indexes. Leaders pulled back as well, maybe a bit harsher than the indexes, but then again, they ran harder the last 2 days. As I highlighted in last night's video, 2 straight days we had 19 of the 21 in our 21 over 21 leaders list up on the day. Today, just 2 up, 2 neutral, 17 down. Pull back an average of 1.03%. The big 8 resting a bit, down 1/3%. RG8, this is our 8 growth ETF composite, down 0.88%. S&P 500 opened flat, ran for about 90 minutes in the morning, and then just kind of worked its way lower the rest of the day, down 0.21%. Just about the same for the equal weighted S&P 500. NASDAQ 100 also down 1/5%, equal weighted slightly positive. Dow down 1/10%, mid caps down 0.85, Russell 2000 small cap down 0.6. Global diversified 60/40 stock and bond down 0.2%. Our flagship portfolio, GROTECTION, down 0.9, led to the downside by our second biggest holding, VRT. Came out that legendary investor Druckenmiller cut some of his stake in VRT, and that was the only reason I could find for a sell-off. The question is, when you look at the chart, is it normal or isn't it normal? And that's a decision that we make with everything that we hold, and we'll talk about that as we get into the charts. Let's kick it off with the S&P 500. You can see a higher all-time high, and then a little bit of a pullback. Let's go to the 5-minute charts. You can see the intraday action trending higher for the first 90 minutes, and then kind of 3 waves down, sell-off, closing near the low of the day. The range on the day, only 31 points, so 0.6%, pretty tight range. Nothing out of the ordinary with this pullback. We are 2.4% above the 21-day moving average and 2.8% above the 50-day moving average. A little stretched versus the 21, very normal versus the 50. Here's the NASDAQ 100, same situation, tight range, higher high, pullback as the day progressed. Dow Jones Industrial Average hit a milestone, piercing above 40,000 intraday before pulling back with the rest of the indexes and closing slightly below there. The S&P 400 mid-cap index didn't make a higher high today. Opened lower, closed near the lows, down 0.85%. But again, put things in context, you can see how strongly the run-up has been for the last 10 days before pulling back near the top of prior highs from mid-March. And the Russell 2000, kind of the same situation. Normal pullback, unfilled gap here against Tuesday. And again, pretty strong run up, normal pullback. So those are the 5 major indexes. Let's go to the VIX. Despite the indexes being down today, the VIX was also down, making a lower low for about the last 6-week period, down 0.24%. This reflects a contraction in volatility, and that's what we certainly saw in the indexes today. Still, the ATR, the average true range of the S&P 500, just barely above 1% on a daily basis. It got down in the around 0.8 while we were in the midst of that strong 5-month rally before spiking up during the pullback. But for comparison, During the bear market of 2022, it reached about 2.5% on an average volume, and that's just crazy to think about it compared to the ranges that we're seeing today. Let's go to the dollar. And I say that because it's important because we track our volatility against the volatility of the S&P 500 to see what's normal and what's not and come up with a multiple of how volatile individual positions are. Here's the dollar. Undercut the 200-day, and this chart does not match the daily chart. Looks like there's a bad print there. But the dollar was up on the day. Not significantly, but higher. Let's go to the precious metal complex. Start with gold. Minor pullback, very tight range after a nice run up yesterday. GDX, gold stocks down 0.7 inside day again versus the nice gains of yesterday. And silver closing right near yesterday's high, so not giving much back at all versus yesterday's big move. Bitcoin also had a big move yesterday, pulled back a bit today, down 1.4%. Bonds, tight range, prices down a bit, meaning yields up just a bit, nothing really significant. That was the broad bond index BND. Here's the long bond TLT, price down slightly, so that means you'll see the yield up slightly, ever so slightly. Closing at the highs of the day, after initially gapping down, and the 10-year closing at the highs of the day after initial, not really gapping down, closing slightly below yesterday's low of the range. So that is our inner asset correlation chart portion of the program. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. A bit of a surprise sentiment, despite the nice moves in the indexes over the last week, did not pick up. In fact, it was basically unchanged on AAII and on NAAIM, which is active managers. Exposure actually ticked down a bit. So a bit of a surprise there, and that's actually good for bulls. You get too bullish in these sentiment indicators. It's a sure sign of a top and a short-term pullback. The news, Dow piercing 40,000 and then pulling back. Multiple Fed speakers today saying higher for longer with rates. Another headline that's not in here is that housing starts were significantly below expectations, and that impacted our portfolio today. We'll get to that in a minute. Day count up 8 of the last 11 days above the 8-day exponential moving average, 10 above the 21-day. Sectors, nothing really stood out today. XLP, Staples was strong because of a great reaction to Walmart earnings and KWeb as China continues to put up some nice gains. To the downside, ITB, that's the builders, and XRT retail. You would think with Walmart that retail would have been higher, but that's why it's important to understand the components of various ETFs. So in the portfolio, we bought Nail yesterday. That is a leveraged home builder ETF. Nice gains out of the gate yesterday. Big negative reversal on that today, tied to the tick up in rates in the afternoon and the gap down at the beginning of the day on the weak home housing starts. And we just cut that short. 0.05% loss of the overall portfolio. Studies constantly tell us that when we enter something, if we enter it at a decent spot, that the best trades work right away. Like multiple downside alerts today on the big home builder components of this ETF, and with a news headline out there like that, and the market being up, 8 out of the last 11 days, we have not much tolerance for losses. We did, however, buy PDD, adding that to the portfolio as Asian retail looking pretty good between PDD, SE, and CPNG. Net effect of that one buy and one sell was a slight tick up in our adjusted beta. Bottom line on the day, normal pullback for the indexes. Leaders hit a bit harder, but as you're going to see when I bring up the 21/21 list here, volume, no real significant volume among the leaders. So I've got this sorted by percent change on the day. And right next to that is the volume column. And you can see, although we had 17 names down on the day. Only one or two had significant volume. We'll quickly go through this. We'll start off with, there's actually 24 items because this includes the two ETFs, one that we still own, IBIT, one that we owned and sold today, and we added PDD, our new holding, into this. So let's go through here. CPNG, down near the lows of the day, a little bit disappointing after a strong gap up in the morning. Note some insider buying here on CPNG. There are multiple reasons why insiders sell. There's generally only one reason why insiders buy, and that's optimism about the future of the company. There's PDD, the slight breakout on average volume above that cup and handle. It's actually base on base there. First, you've got the double bottom where it gapped up on its last earnings report before selling off, and that was the beginning of the pullback of the market. So you'll see this all the time when a stock's pulling back. Just look up to this black line on the back on the top of the market surge chart, and if the S&P 500 is pulling back, it's not a surprise that the individual names are pulling back because 75% of stocks will move in the direction of the overall market trend. Next up, First Solar, we own this up 1.4% on the day, bouncing off the 21-day 2 days ago. Reminder down here in this list, if it's green flagged, it means we own it in our portfolios. Micron gave back some as it got near the top of this cup base, but still up slightly on the day. Nutanix just barely down slightly on the day near the top of this double bottom pivot. American Express, slight pullback today, acting very tight over the last week. Howmet continuing to hold up. That's an aerospace stock. CCJ pulling back 4 days, just barely holding between that 50 level and the 21-day moving average. NVIDIA, positive most of the day today, gave it up by the end of the day, but just a slight tick lower. Goldman Sachs continues to be a frozen rope higher. This riding of the 8-day moving average higher, we just love to see this if we're in it. You just sit back, kick your feet up, and wait for it to break that level for your first sell signal. That just looks great. No, we don't own it, but I'm saying if we did, that's what we'd be doing. Here's GDX continuing for the last 2 weeks to ride the 8-day moving average higher as well, now near the top of the handle in this long cup base. GE Vernova chopping, no progress the last 2 days. TMDX continuing to work its way higher, and very nice winner since its earnings gap higher. AppLovin and APP pulling back a slight bit today. CrowdStrike, our biggest position, pulled back 1.18%, normal pullback on lower volume. Volume patterns have been great on this since these 2 days of above average volume kicked off this latest run higher. Carrier, basically going sideways for the last week. Pure Storage, after 2 nice up days, a gentle pullback day. IBIT ran into this 50-day moving average, retraced some of yesterday's big move higher. Abercrombie and Fitch, look at this beautiful run that it had last year and before finally forming a base. And it's starting another 2.5-week run above its 8-day exponential moving average as well. Kava riding that 8-day, just like we like to see. FCX pulling back today, sitting on the 8. CEG pulling back after a nice run up after its earnings report. VRT, this was the headache in the portfolio today, down 7% on a 5% position. So that was a third of the portfolio loss on the day just here. But looking at this, it's completely normal. You can see several undercuts of the 8-day moving average. This is a little bit more on the volatile side, but riding the 21 higher just fine and acting great since a shakeout on its earnings report. And finally, Nail, this is what we got stopped out of today. Above average volume on the selling. It was a 1% size because this is a leveraged ETF, down 9% on the day. We closed yesterday up 4%. So net gave back 0.05% to the overall portfolio. And as I said, we got downside alerts on several of the big stocks today, breaking yesterday's lows. There's Toll, Pulte, EHI, all reversing. Not on volume, mostly on lower volume than yesterday, but very much tied to interest rates. Interest rates have pulled back, or I'm sorry, have pulled back. a bit, but that news on the weak housing starts, that's not what you want to see right after you buy something. Maybe these just put in a little bit more of a handle here, and we get some positive housing news, and it'll be at the top of our list to re-enter. That's going to wrap it. As always, like to hear from you. My email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart. That's dan@revereasset.com. I'll be on IBD Live tomorrow morning starting at 9:20 Eastern Time for a little more than an hour and a half. Looking forward to that, my debut on there. And it's not free, but you can get a 3-month trial, and the program is fantastic. I listen to it virtually every day. And you can get 3 months for $10. Well worth it. And with that, reminder, it's not how much you make in the markets, it's how much of that you can keep. Our flagship portfolio is named GROTECTION, as it's designed to grow assets during market uptrends. They start breaking support levels, we start pulling back. We break below this nasty black line. That's the 200-day moving average. Every single bear market in history has taken place below that level. We don't get overly concerned about the market until we start breaking that level, but we're not protecting right now. We're in growth mode as the markets kicked off a rally a little more than a week ago. And as long as that continues, we'll ride the wave just like we did from November to March. Never know how long the wave is going to go, how long it's going to last, how high the gains are going to be, but we've got a plan in place for every position if it's quickly reverses and starts to head lower. And if you're interested in this approach, reach out to us. And with that, I'm going to wrap it for Thursday, May 16th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.